Well, good afternoon, everyone. It's 6 minutes past 3 here in the UK on a lovely sunny day in West London. A little later in the week than I normally post these things, but the UK holidays put my schedule back. So uh, in the last couple of weeks, I looked at oil. It's moving the way I thought it would move, not with the momentum that I thought it would move at, but nevertheless, it is moving up. And the gold markets had a very good morning today. I still think that this wave up in gold is mature and that we'll see a pullback in gold relatively soon. Nevertheless, as I explained last week, I've still got a position in the GDX long, which is going very nicely indeed. What's next for the stock indices? Well, the stock indices, folks, are stuck at a very interesting juncture. And I'm going to try and explain that on the SPX cash data in the next couple of minutes. So on the front page of VectorVest, I'm looking at VectorVest US. I'm seeing that the short-term trend of the VectorVest composite has been up for a couple of days, although it's early in the day yet. We're only into the day, half an hour. That could change. The underlying trend is down. And the longest term measure of the trend is down, and it's been down for a month and a half now. VectorVest advocates caution buying stocks at this time. So if we actually have a look at the VectorVest composite, if I can find it, that's the VectorVest composite, ladies and gentlemen. And it's a composite indicator of all of the shares that VectorVest follows in the US market, some 8,000 shares, very broad measure of the American market. The red and green triangles that you can see are in fact the longest term measure of the trend on VectorVest. They're called confirmed calls. And the last confirmed call, in fact, was down on the 21st of February, and that has kept us well out of all that banking angst that we saw last month. Now we're rallying at the moment, and the longest term measure of the trend has not, in fact, started to break up, and it's got quite a bit of work to do before it will do that. Now, we have a medium-term measure of the trend called the DEW, and the DEW has, in fact, given a buy signal recently. So what have we got in the American markets? The short-term trend is just turned up. The medium-term trend is up, but the underlying trend, which is a longer term measure of the trend, is down, and the longest term measure of the trend is down. So aggressive traders could certainly be getting their feet wet in this market. Although the DEW is up, we haven't been able to get above this point, this support point, and that support became resistance here, and it became resistance yesterday after Mr. Powell spoke, or the FOMC minutes were posted, should I say. So I would like to see a close or even a couple of closes above that trend line to confirm that this move is on its way. And that was my advice to the VectorVest customers on Monday afternoon. Now, or Tuesday afternoon this week. I trade the SPX fairly aggressively, not as aggressively as maybe as I used to, but fairly aggressively. And the SPX is at a very interesting point, and it's been at that point now since I did the VectorVest Q&A the week before last. So that was Monday. It's been there since Monday, the 3rd of April. And as you can see, we had a wave down and this wave up, and we stopped at 78% of that. The level is 4110. Now, those of you that have studied a little bit of Elliott will know that we saw 5 waves down here, 1, 2, 3, 4, and 5, and there's been 3 up. And that's a bearish pattern made famous by a gentleman that I've referred to here many times, but called Harold McKinley Gartley. Now, whether you believe Fibonacci is real or whether you believe that Fibonacci is just made up by people selling courses, I don't really care. But there's a great deal of money that follows the Fibonacci levels. And Fibonacci-based traders, and I assure you there's lots of them, have been shorting this market right at that 4110 level, and that's held up there now. Since the 3rd of April. We came off that level yesterday afternoon, apart from the shouting. So, as with the VectorVest composite, I've recommended, our traders are all experienced, they can do what they want, but I think that I would like to see an emphatic break of this 78% retracement before getting into this market big time. So I'm unsure what's happening next. The market is making a decision for us here. I think that if we do see a break of this level, we're going to see a very strong move up. So I'm reasonably positive. However, if we should close down below those lows of a few days ago, then unfortunately we could see another sell-off here. So this market's still trying to make its mind up about the implications of the CPI yesterday, about the implications of the market discounting a 0.25% interest rate hike, and then maybe it's over. Maybe that's peak, and we're going to come down from there. So an awful lot being discussed this afternoon. And if we now look at the intraday picture, that's the intraday picture. I've taken a few trades. I was short of this yesterday from here. Oh, I know it's rocket science. It's a 15-minute chart. Market made a falling top, and I shorted that low, and I got lucky. Okay, simple as that. I haven't done anything today here, and we're moving up quite nicely. So I have nothing done as yet. I haven't got a signal, and I'm looking at a 15-minute chart here. It suits me at the moment. So so keep your eye on the SPX. Keep your eye on this 4110 level, and a couple of closes above that level, and I think this market's got a great deal of legs, folks. On VectorVest, the short-term trend is up, a medium-term measure of the trend is up, but the longer-term measures of the trend are still down. So I think we should stand aside or enter the market with very small positions until we see that level at 4110 well out of the way. So I hope that helps. I have a position, as I say, a leverage position long of the GDX. I have a leverage position long of oil. And in the UK, I've got a portfolio where I'm 42% invested. Situation's very similar across there. We've got a support level, which is a previous support level that's now become resistance. We need to get through that level in exactly the same way as the American market is showing, just different numbers. And I'll hopefully, if we do, the S&P does break up, I shall be adding to UK positions over the next day or two. I think the market's going to make a decision for us very quickly, folks. Thanks very much. Bye-bye.